Hello, everyone. On behalf of the Thomson Reuters Institute, I'd like to welcome you to today's webinar entitled Stormy Weather, Examining COVID-19's Financial Impact on Lawyers. Before we jump into the discussion, I'd like to highlight a few notes. Today's program is being recorded. For those of you joining the live webinar, note that we'll be emailing you a link to the recording shortly after the live session ends. Our panelists are welcoming questions, so please feel free to submit those in the Q&A box on the left-hand side of your screen. We'd also like to thank ABA Retirement Funds for their sponsorship of today's program. And without further ado, I'd like to welcome our program's moderator, Robert Siebold, Chief Operating Officer at IST Management Services. Bob, welcome.
Thank you, Dawn, and welcome everybody. It's great to be here today and have a reason to put on a collared shirt and a tie and stop watching CNBC. So welcome everyone. I'd like to thank my fellow presenters for being here as well. I think we have a very interesting and diverse panel. Looking at the summary here, we may have given the impression that this really is about personal financial planning, and we certainly will have some comments about that, but we're going to kind of follow the order where we're going to hear some discussion, have some discussion about the financial pressures that lawyers are feeling in this environment. First, from the perspective of a young partner at a major firm, and then we'll transition into leadership strategies at the firm level. We have a managing partner and chair from a prominent firm, and I will also contribute to that as well. And then we'll move on to some suggestions for dealing with this from a personal level. The names of the speakers and the bios are all in the materials, so I'm not going to read their bios. I will ask, as I call on each presenter, that they just give a very quick summary of, again, their name, their organization, and any other context before they launch in. And so with that in mind, our first speaker up is Courtney Peterson. And Courtney, I'm going to throw it to you and let you introduce yourself and go from there. Courtney?
Okay. Thanks, Bob. Thank you, everyone, for joining. I'm happy to be able to be here and hopefully provide some knowledge that will be helpful to everyone as they're weathering through this storm of the COVID-19 pandemic. So I am recently appointed to be a partner at my firm, Bryan Cave Leighton Paisner. I became a partner in 2019. I work in the New York City office, and I've actually spent my entire career at Bryan Cave, was formerly Bryan Cave and now Bryan Cave Leighton Paisner. And I'm a partner in the Commercial Disputes Practice Group. And for people who are wondering what that is, it's just a fancy way of saying commercial litigation, because we have to be difficult. I started my legal career at Bryan Cave back actually in 2007 when we were entering into the Great Recession. So a lot of the things that were going on then have informed my decisions now as well. As a junior associate in that time, I was very concerned about having billable hours and making sure I was meeting my minimum requirements, and also very concerned about whether or not there would be layoffs, because I understood that there was a slowing down in the work at that time. And so having lived through that crisis and having survived that challenge, that's really giving me a baseline for dealing with the current legal challenges that we're facing in the market and trying to address how we can go forward and how to best position ourselves in the firm in terms of making sure that we have enough work, and also outside of the firm in terms of making sure that you're feeling financially secure. So a lot of the concerns that I have been hearing from my colleagues have to do with, one, workflow, and two, issues about whether or not there's going to be layoffs. Unfortunately, I'm not a soothsayer. If I was, I'd probably have a different career, be a little famous. But and I can't predict what's going to happen here. But I think that there's a lot of things that we can do to position ourselves for success, actually, moving forward, and hopefully to assuage some of the fears that we have about the current financial situation. So in terms of dealing with financial challenges, I think it's fair to say that as a lawyer who works in a big law firm, myself and other people that I know, we're not really dealing with the same level of financial insecurity as maybe persons in the general public, but that doesn't mean we don't have fears that are valid. we're lucky enough to have the privilege of earning good salaries and being able to prepare in order to position ourselves to weather economic storms as they may arise. You know, personally, I live my life pretty fiscally responsible. I grew up in a working class, middle class family. And so a lot of the values that I had growing up, I've maintained even as I've developed in my career and been able to earn more money. And I really haven't adjusted my core financial values as I've progressed in my career. So that's been helpful, obviously. I like to say I never met a coupon I didn't like, and I never found a sale I wasn't willing to wait for in order to buy something that I really wanted. So I personally haven't had to make a lot of adjustments because I do live my life that way generally. In terms of investments, you know, at the start of the pandemic, I did reach out to my financial planner to do a check-in to just see, you know, what should I be doing? Should I be doing anything differently? Should I be making any changes? You know, he assured me that I should just continue on with the plan that I had set forth, you know, in terms of making monthly contributions to my retirement plans, monthly contributions to my additional investments that would help me in retirement. All of those things have remained the same, and I haven't made any adjustment to them. I haven't, you know, gone off a ledge and decided to take money out of my 401k. I've just remained settled and trying to ride the wave of the market. So I haven't made any changes in my investment strategies. You know, actually a few, I guess almost 7 months ago now, I got married. So after that, we did take a check at our financial health and made some adjustments. So we looked into looking at our savings accounts, looking at our checking accounts, making sure we were getting the best rates on those types of things. And so we locked in some pretty good rates before this all started that are still prevailing at this time. They haven't been changed. So that was actually a good preparation to make sure that we'd be set up for our financial future just in general. And actually, I am saving more money right now because a lot of things that I would normally spend on are things that I can't really do anymore. You know, I'm not eating out. I can't get my blowout at Dry Bar. We're not going on vacations. We're not purchasing a Metro card. You know, I'm not buying new clothes for work, although I have splurged on a few work from home outfits because I had to get into that tie-dye craze, and I did make sure it was on sale. And in terms of focusing on work and trying to position myself in order to feel that I'm secure at work, you know, it's important to make sure that you're keeping busy. That's not always easy in this time because the work has slowed down, but there's other non-billable things that we can be investing our time in. I have worked on some thought leadership, which has actually led to a few new matters with existing clients. I have reached out to other persons that I work with just to touch base, let them know that I'm available, you know, if they need assistance. And I have gotten a few new projects. So it's also very important to maintain the relationships that you had before the pandemic and to let people know that if they need help, you're available, to make sure that you're being responsive to clients, even though it might be difficult in this time when we're feeling personally, mentally, emotionally stressed, and to also make sure that you're delivering good work product, even though it might take a little bit longer to get to that great memo that you used to write, you know, in half a day before, but now you're feeling a little bit more stressed and emotionally drained, and so it's taking longer. But in the end, you still want to deliver your clients, you know, good work product. You still want to try to be responsive because when your colleagues are looking at who they can depend on, you want to make sure that you are one of those people that seems dependable. And I know it's hard to pretend that everything is still the same as it was, you know, just 2 months ago. It's not the same. It's harder. we're being asked to work from home, which doesn't seem like a big deal, but it is, because you lose out on those personal connections that you're used to having each day. And that does make a difference in your work experience and your daily life. And so we have to make adjustments and find things that we can do in order to keep ourselves sane, so that we can still focus on doing a good job ultimately for the colleagues and the clients that we work with. I'm happy to answer any questions or to turn it back over to Bob, but that was essentially what I prepared to say.
Yeah. Courtney, I have a question for you, and I want to congratulate you for being very fiscally responsible. It sounds like those old habits that you brought to the situation are faring well for you. I'm going to tell my own story shortly. I was not that disciplined at your age, but are you hearing from other partners, maybe at other firms, where some of the widely publicized cutbacks and draws have been announced? Are you hearing any acute level of stress or any coping strategies from people who may be in that situation?
I've heard not directly that people are stressed, but through the grapevine that people are stressed. I know that people were concerned with the changes in the ability to draw from the partner accounts, that maybe they wouldn't have enough cash flow at this time in order to meet their ordinary expenses. And there were talks about maybe reaching out to our financial partners for loans if people needed that, or also trying to work through problems with having to put up the capital for the investment into the firm. So I have heard things like that, yes. And I think one of the things people talked about was getting loans, from our financial partners, and that there were low interest loans available to partners if they might need those.
Well, that's great. Well, I'm going to save my own anecdote for my time, but thank you for setting the table with that overview here. And I think now we'll transition to a discussion of leadership strategies, that is at the firm or organizational level. And for that, to get us started there, we have David Scharf. David, will you please give yourself a brief introduction, and then I'll take it from there.
Yes, thank you, Bob, and thank you, Courtney, for setting that table. Setting the table is so important as you go through a panel conversation like this, and you touched on some really important points, because the perspective that I have as chairman of a law firm now, and we have 200 employees, over 100 lawyers located in the midst of New York City, is really born from my own experiences. And this isn't my first crisis that I've been through, although it is certainly my first crisis of leading a law firm. But the thought process that we started to implement and the conversations we started to have in February of this year were very much impacted by virtue of the fact that in 1990, I was a summer associate. And for those of you who might remember, that was the summer where everyone had jobs, but by the end of the summer, hardly anybody had offers. And we were out there looking for jobs when the market was completely saturated and with a huge amount of competition, because the '87 stock market crash hit the law market in the summer of 1990. Working through, I was a new young partner at a new firm on September 11th when, and I was at Morris, I had just joined Morris & Cohn about 10 months earlier when the cataclysmic attacks occurred on September 11th of 2001 and the effects of that. And I was part of the firm's leadership in the Great Recession between 2008 and 2011, and really was looking at 2019, which was my year as vice chair of the firm, transitioning into a chairmanship position where everything looked like it was smooth sailing ahead. The economy was good, business was strong, and then this little concept of COVID-19 started cropping up into our conversation. And we realized very early on that what was happening in Europe, what was happening in China, was going to have a profound effect on the way business was going to operate. Now, I will tell you, we didn't predict that we would be out of our space for long periods of time. But I noticed in looking back on our timeline that by March 2nd, we were having daily leadership meetings to deal with whatever COVID-19 was going to bring. By the beginning of that week, we started looking at liquidity analysis for the firm. What was it going to take? How could we be affected? What can we envision our worst case scenarios to be? And how do we ameliorate that? And by March 7th and 8th, we had our first draft of what we turned into an austerity program, a liquidity analysis that took into account a drop in demand, a drop in hours, an effect on the work environment, albeit never anticipating this, as well as a reduction in collections. We started looking at the integrity of our ability to work from home. What would we need to do if we needed to turn the switch and it became unsafe? Again, never expecting that there would be an executive order from a governor or a declaration of an emergency from the President of the United States to say, you just need to stay home. But we started testing, we started looking and stress testing our systems to learn whether or not we could, on a flip of the switch, shut the doors to the firm, go home, work from there effective, and continue to be a going concern. And you know, I had the opportunity to be in a very strange environment when, and I don't remember what year it was, but there was a blackout in New York in somewhere in the 2000s, and I was in the offices of Howard Lutnick of Cantor Fitzgerald, who lost nearly all of his employees on September 11th. And one of the things that Howard asked me to do before I started working with him, and I've been working with him for about a year by that point in time we had met, was I needed to read his book, The Rise and Fall of Cantor Fitzgerald. And it was really a lesson in crisis management. But when the blackout hit, and it was 4:30 in the afternoon, and I was in Howard's office on the 3rd floor of a building on Lexington Avenue because he was no longer going to put his employees at the top of the World Trade Center or any tall buildings, I watched a seasoned veteran who had been through crisis management for his firm spring into action, and watch how he systemically checked on the welfare of his employees, was caring to make sure that his employees would be able to get home, would be able to get out of the building. And he did all of those things before he went to check on how his trading systems were going to operate, what was going to happen with the financial markets. And that became a very important lesson for me as a leader, because ultimately an organization is really made up of the people that are in the organization. There is no one person, there is no executive committee, there is no compensation committee that truly makes a firm. It's every single individual, the fabric, the culture of who you are and how you operate in times of crisis is truly the moment and the defining moment of leadership. And while our new leadership team was definitely not expecting to be tested so early, it was an amazing process for us to really start thinking about what could happen to our business. And one of the first and foremost thoughts was informed by Howard's leadership. And that was, who are the people that were most likely to be affected by this financial crisis? And we actually identified people who had made significant purchases right before. And that's fortuitous. Did you buy a home? Did you buy a summer home? Are there family changes going in your life? Are there children being born? Are there college tuitions that are now committed that you need to take care of? Or are there new elder care responsibilities? Really looking at every single individual of our nearly 200 employees and understanding where they might be and thinking about every single person individually and making it about them and not about us. Because ultimately we felt if we made it about them, we were going to be a better organization. People were going to work harder and pull through. And with that community, with that commonality of community, we were going to be a stronger organization. And we recognize that first and second year partners who had shifted from W-2 employees with withholding were also going to be affected here because they now have quarterly tax obligations that they have to pay. They have buy-ins. And starting to talk to all these people, and we literally got out there virtually on the telephone through webcams, having our department leaders touch base with every single person, communicate, but very importantly, mentor. Start talking to the people, not only about what we were doing at the firm to manage the firm in a fiscally sound way, but to remind them to manage their own family in the same way that they want us to manage the firm. They wanted us to be careful and watch every dollar. We wanted them to remember that that's what they should be doing because that was in their best interest. Do a budget if you hadn't done one before. Look at your own personal borrowing base, the way we look to our letter of credit, the way we look to the CARES Act to supplement our liquidity. We wanted people to look at, did they have to make those quarterly tax draws, those quarterly tax payments? Talk to your accountant, talk to your financial advisor, just like Courtney did. Make decisions about, can you continue to fund your flex accounts? Can you continue to fund your business development account? Or are you in one of those life moments where you've just bought that house, you have that mortgage, and now because we are going to be cutting back on tax draws, you're going to be affected by that. Same thing for our associates. To the extent we were going to be pulling back and recognizing that we were going to have to reduce salaries as part of an austerity program, how are we going to do it in a way that was most humane and that was appropriate for our entire culture? And then after we mentored people in terms of managing their finances, we went about, and this was really simultaneously, talking to people about managing their careers, pivoting to where the business was, and really talking about that great book that I've been talking to people in the firm about, Who Moved My Cheese? The world changed for all of us. And some of us are going to be busy. Some of us are going to need to figure out a way, as Courtney said, to make themselves busy and to be additive and an important valued member of the team. And people step up or step back. There is no stagnation in this, what I will call a crisis environment, a changing environment. The way the practice of law, the way the business of law will change, you can't simply say, I'm going to continue doing what I was always doing. It's a moment to reevaluate and make a firm decision. Yes, staying the course is the right decision for me, or pivoting is something that is important for me. So that's how we started this process. We're continuing to go through that process on a daily basis. Management is talking about how we open the office safely, what personal protection means like for everybody, who we ask to come back to the office, how people come back. And all of that is in order to create a sense of community and drive towards a common outcome. Bob, I think that's really my thoughts and prepared remarks. And obviously, if you in the audience, have any questions, I'm happy to respond.
Sure. David, one question. You had mentioned that your firm very, very laudably is reaching out to young partners or taking into account what you think may be going on in their lives. Has this led to any kind of across the board lessening of the burden on the young partners, or is your structure such that that would happen anyway?
So we treated everybody the same way in terms of the partners stepped up and said they were going to put back or leave as much liquidity as we could in the firm. And yes, some of the younger partners do have a disproportionate, well, it's not disproportionate, it's just as it relates to their amount of where their lifestyle is, it is significant. And we're looking at that as we head towards July and monitoring our cash position in our business, because we put in place a 6-month austerity program where there weren't going to be any tax draws. But part of that was driven by the fact that there wasn't an April 15th tax payment. There wasn't going to be a June 15th tax payment. So that gave us a little room, and that really helped formulate some of our thought process on how can we do this in a way that doesn't slam people, recognizing that first and second year partners, that second level draw was a significant portion of what their expected income was going to be. But as we're working through this process, we're very mindful and have had conversations. Will we treat some of our younger partners who are drawing draw as opposed to salary, not necessarily that different from when they were senior counsel or associates at the firm? Do we think about treating them differently as our cash position looks as solid as blessedly it so far has?
Got it. That makes perfect sense, and it's bringing back some memories. My part of this is to really reflect on my experience both as a practicing lawyer, including being a young partner when some bad things happened within the firm that may not have happened to other firms, just ours. And then once I got into management, going through, like you did, David, 9/11 and the financial crisis. As my bio said, I was a practicing lawyer in Virginia for 15 years with the firm of Mays and Valentine. I came into management way too young when I was in my late 30s. We, after 7 years, merged our firm into Troutman Sanders, and I spent the next 18 years in the management of Troutman as COO. Going back to when I was a partner at our Virginia firm, and this is really to make a case that while there are black swan events that affect the entire industry, such as 9/11 and the financial crisis, and of course the current pandemic, there are bad things that could happen to a firm that may be just the one firm. In my case, as a young partner in the late 80s, we were all called together one day and were told that one of our senior partners who had joined us laterally in the last year or so had admitted to stealing almost $2 million from his clients' trust accounts. And that was devastating, created a huge morale problem within the firm, a lot of questions about monitoring and process. And of course, it was a public relations and client issue. Fortunately, our firm stepped up. We handled it very responsibly. Our clients rallied behind us. But in the short term, it created a crisis. And I was a partner, but we were a one-tier traditional partnership. And the loss of net income for that year filtered through the partnership just proportionate to income. And as somebody who was, at that point in my early 30s with young kids, of course, I came into that year thinking, well, of course, my income is going to go up forever. I've learned since that's not how it works. I had to make some hard decisions at home with the help of my wife. But the main thing that got me through it is the confidence that I had in firm management. And David, all of the things that you were talking about the really being empathetic, looking at individual situations, communicating with the partners, as well as other constituencies, really helps to build confidence in the entire organization and will sustain people through a lot of difficulty. And I certainly felt that as a young partner. Moving ahead to when we were Troutman post 9/11, as you all know who lived through that, there was certainly a free fall in work of all types that affected nearly all firms. At that point, again, at Troutman, we were pretty much a one-tier partnership. We had a few non-equity partners, mainly who were in wind down, but we all took a big hit, about 15%. Now, this was in the first year of the merger of Mays and Valentine and Troutman, and we were off to a great start in the first 9 months. We had a retreat where there was so much camaraderie. We had a lot of people involved in the due diligence, and then suddenly there was the free fall at the end of the year. But again, you'll hear a theme here. What got us through that, as painful as it was we were committed to the firm as an organization. We had gotten to know each other, that is the Virginia lawyers from Mays and the Troutman lawyers. We'd gotten to know each other through the due diligence process. Our spouses had been exposed to one another at a retreat. And as painful as it was in late 01 and early 02, the overwhelming feeling was, let's get through this together. We had that bond that really sustained us. We were very fortunate not to have to really do too much in the way of things that would affect associates and staff. We did stop hiring new new folks for a while, but we deferred raises and bonuses, but we didn't cut any pay. We didn't furlough anybody. And as far as staff was concerned, again, it was really a matter of a freeze in hiring, not a reduction. Flash forward to the financial crisis, again, an event that affected the entire industry. It was very difficult for partners. But again, the common theme here is we as partners, this was again at Troutman, we felt that it was the right thing to do for the partners to be seen as taking the brunt of the pain, to be seen as taking it and actually taking it. And, you know, we missed budget that year. I don't mind telling you, we were 23% below budget. It was terrible at home to have to deal with that. And, but we did visit some of the pain in proportionate ways throughout the organization. We did have some staff layoffs. We did have some reductions of attorneys. And this is where it gets a little tricky, because sites like Above the Law are on the lookout for firms that engage in what they call stealth layoffs, where they use the excuse of a black swan event to make reductions of their weaker performers. The flip side of that is sometimes a crisis will expose weaknesses that you may not have known were there, or which maybe would not have been prepared to deal with. And so we at Troutman, although the partners took the brunt of the hit that in 08 and 09, we did do some staff layoffs. We did some reductions of attorneys. I personally had to meet with 28 partners to ask them to find a new place to practice. And again, that was a very painful experience, but I think overall we came out of that more or less with goodwill of our staff and our lawyers, because they felt that overall the partners had stepped up and taken the brunt of the pain. In the current environment, anybody can read Above the Law or law.com and see the running count of firms and how they're dealing with it, from partner distributions deferred or reduced, summer associate programs being canceled or restructured. I give a big shout out to the firms that have agreed to pay their summer associates, or at least provide some kind of financial assistance, and also honor a commitment to provide a job next year. And likewise, the firms that have put in place an associate salary reduction, some of those have said, well, basically, here's how you can get it back at the end of the year, either the firm having a better fourth quarter than we're anticipating, or perhaps some individual contributions, some extraordinary performances. So I think both of those things, again, will send great messages to your people, because at the end of the day, my philosophy is this: as painful as all of this is, I think a firm has to really come to grips with what its values, with its culture, and start by saying, where do we think we're going to be in a year from now, or a fall of 2021 at the latest? Do we want to have a vibrant organization? Do we have the people here now that we want to have then? And if so, I think, again, the partners just have to take the overwhelming brunt of whatever burden is to be taken. I admire the fact that there are many firms out there, not necessarily the most profitable, who have made it clear that the partners are taking virtually all of the pain. Now, within a partnership, you have to differentiate, I think, between the more senior partners and the more junior ones. And I appreciate what David is saying about the efforts that they've made to look after some of the younger partners. But I think at the end of the day, if the associates, the non-partners, let's say, and the staff perceive that the partnership has taken on the brunt of this event within the partnership ranks themselves, they will feel a tremendous amount of loyalty. May not be every single person, but there will be a tremendous reservoir of goodwill that is built through that process that will provide a return. That's my philosophy there. And I know we're going to have some discussion here coming up next about specific individual strategies for dealing with the financial stress. One thing I'll say, and this has been alluded to early, I did a lot of cutting back in those crises, even in the later ones when it affected me personally. The one thing that I regret doing is I stopped contributing to the voluntary portion of the retirement plans. I wish, in total hindsight, that I had borrowed the money or cut something else and kept those contributions going, because there's nothing like tax deferred savings and the compounding effect. I think there are many thousands of dollars that are not in my account today because I I didn't make those contributions at the time. And that's my one takeaway as far as my personal advice. So with that, I think we've bridged here from setting the table with the difficult situation that many lawyers are facing from a financial basis to the leadership strategies that a firm can and possibly should employ. So now we'd like to move to the third part of our program, which is on financial strategies that individuals can employ. And so next up, again, Ginger, please introduce yourself a little more here. Ginger Brennan.
Sure.
You're up.
I'm up. Well, thank you very much. And great insight from all three of you. Thank you. My name is Ginger Brennan. I'm the head of ABA Retirement Funds, which is a member benefit of the ABA. And we cover retirement plans. So defined contribution, defined benefit plans for 4,000 law firms throughout the country. So I have the unique perspective of seeing a lot of different law firms and what they're doing during these times. I've been doing this for a period of time and have been in the financial services business for almost 4 decades. So I too have seen various crises, 9/11, the financial crisis, et cetera, and this truly is unprecedented. But I really liked what I heard in the first few talks about hope. I think this is a time when we will get through. So I'd like to share about this really sort of 3 areas. One is kind of what we're hearing from our law firm clients. We cover roughly 40,000 attorneys and their staff. So we hear a lot as to what they're seeing out there in the market, what their firms are doing, and it echoes very much what we've already heard, is that practices are worried about keeping the door open. What can we do to make sure that we're keeping staff on as long as possible? The CARES Act that David referred to earlier, many of these smaller firms are eligible for the PPP. So they are coming to us to get information so that they can file effectively for the PPP. There is a general feeling of, I would say, uncertainty in the marketplace. What we're hearing is that participants are worried about retirement. I would like to, Bob, your comment was a perfect lead-in to what we always say, which is it's important to save something. So when we're out and meeting with all of our clients, one of the things that we do is no matter what the markets, no matter what the times, is to make sure that if it's at all possible, save something for retirement, because it is something that certainly you'll benefit from in years to come. I am the mother of 3 kids, and 2 of whom are out in the working world, neither of whom are attorneys, but they one of the things that their mother made them do is to make sure they signed up for their 401k plan as soon as they were eligible, because it's a great way to, on a methodical basis, be saving for retirement. Back to the CARES Act, one of the things we're seeing too is a lot of firms having interest in the COVID loans and distributions. And for those of you that don't know, it is essentially another way to get access to 401k accounts, particularly for those people who have been affected by COVID and need the assets to pay their bills on an ongoing basis. We interestingly are not seeing a tremendous number of requests for the COVID loans and the distributions. It seems to be something that participants are happy that they know is available, but we have not seen, if you will, a run on the bank for those types of distributions, nor candidly have we seen a lot of reallocation of investments. So I think a lot of people are sort of pausing a bit during this time to say, they don't want to make a stupid mistake. They want to make sure that they're making the right moves. And I'd like to echo again what Courtney said and others, which is the importance of communicating with the people in your firm. And it's not necessarily the partners. The ones where we've seen the most unease is it's the younger people who may not have lived through something like this before. So we are communicating they're the plan administrators at the firms, the partners. We at the ABA retirement funds are also communicating with these participants and encouraging them to speak to a financial advisor. That is actually a service that is available through ABA retirement funds, where each person can get individual financial advice. And we're seeing a pickup in that because people really want to know, what should I be doing? If I have to cut back on my savings, as an example, how much should I cut back? And when should I start back in? And, how do I, for example, contribute to my 401k plan and also be paying off a student loan? So many, many different areas, and each person's situation is different. So I would say for anyone out there, you should be speaking regularly with a financial advisor, similar to what Courtney said, is just to touch base to make sure that you've got habits and a plan that will last through this crisis and beyond. We're also seeing, interestingly, we provide also solo plans. So we've seen, interestingly, an uptick in some solo firms interested in starting plans. And it's a member benefit through the ABA retirement funds, where they get a great sort of discounted pricing for a small firm. And you think, well, why are they doing that now? And part of it, I think, is why not? So we are seeing an increase in startup plans, solo firms, small firms saying, you know what, let me start now. There's no upfront cost. Let me put it in place just so I have it on a going forward basis. So we are seeing an uptick there on both, by the way, the defined contribution 401k and also for cash balance. We're seeing an increase in cash balance plans. So moving on to some overall observations, I would say the communication piece is vital. Technology such as this, I believe, will continue well into the future. We're finding that this is a great way to be communicating with clients. With the ABA retirement funds, it is overseen by a board of 13 attorneys who are the fiduciary for the overall trust, in addition to Mercer Investments. And we are planning on our first virtual board meeting. We've had a couple of committee meetings, and it's becoming a really great way to talk to people. It doesn't completely replace the way to be engaging with people other than just on the phone. So I think we'll start seeing a lot more client visits, employee communication meetings, board meetings with the ABRF that are more using this type of technology. The other thing we're seeing too on the retirement plan side from the plan sponsors is a real interest in offloading as much as possible their fiduciary exposure. Many of these smaller firms, in particular small to medium-sized firms, have a committee at their firm who act as the overall sort of investment committee fiduciary for the plan. And with markets like this, we're seeing a real interest that people don't want to do that anymore. They want to outsource that to someone else, and that's where Mercer Trust, with our particular solution, comes into play. We had a partner at a firm that we met with who said this would be a great time not to be a fiduciary for my plan. So we're seeing some interest in that. I would say in the sort of the post-COVID world, what are we looking at, as we kind of emerge? And our team at ABA Retirement that I run, so we have a team that runs all of these plans. It's about 70 different people, and I did the math and figured out that there are about 50 school-age kids at home with 2 working parents, and 2 of them have spouses who are ER nurses. So there's a lot of, if you will, chaos happening at home when you have all these kids that you're trying to homeschool, and now with summer camps and such canceled. How do you help your own employees through this time when they're trying to do their jobs and do it well, but also have family responsibilities that are right in their face. And I like what Courtney said earlier. It's like, just take a little time. You might not be 100%, on task, but you will get the job done. So our team is doing well. We've hit every service standard as far as contribution processing, transaction processing, plan amendments that need to be done. We're answering the phones from the participants, but it's hard because everyone's working at home in different types of environments. So I think we need to be sensitive to each other's needs. We need to be, I guess, forgiving. If people have kids that run in a Zoom meeting, that is what happens. Also on a going forward basis, I think it will highlight again the real value of having advice and having a plan. Many participants, it was fairly easy to make money in the investment markets in the last, certainly 8 to 10 years. Now it's going to be a lot more difficult. So people need a plan. It's not just put it in the market and watch it rise. But you want to make sure that you're in a plan that makes sense for you, for your family, and that also can be adjusted. One of the things we found with lawyers is that, or I guess with anybody, there's no smooth road through. People, you go into a big firm, you leave a big firm, you start your own practice, you get married, you get divorced. There's just a lot of things that you need to keep in mind when you're setting up that plan. And having someone to really guide you through that process is very interesting. The other thing, just to notice too, I think firms should keep an eye on is the business of record keeping for retirement plans is a tough one. It is a tough one to do well, and it became pretty clear when COVID hit that there were going to be some particular smaller record keepers, vendors that may not have been able to pivot as well as they could, or as pivot as well so they could serve the needs of the participants. So we are seeing an increase, not with our clients, but with other law firms that have smaller record keepers that they're working with, that they may not be getting the service that they like. And again, we're seeing some interest there. Also, I would tell you there's a big increased need or exposure to cyber. One of the things the ABA Retirement Funds has done is we just went through a cyber review, but it is so important that firms and the vendors that support their retirement plans have the appropriate cyber controls in place. That again has been an area of deep concern. So the other thing looking forward to, I will tell you, is that firms are starting to be very concerned about investments for their coming up into retirement participants. We have an average age in the overall ABA retirement funds that's older than most. Many attorneys work well into their 60s and 70s. And they're looking for a way of what's appropriate investments for me as I move through these next stages. And the ABA Retirement Funds is coming out with a retiree menu to fit that need. But I do think in general, there's going to be an interest on what can we do for older employees as they enter retirement and go through retirement, what are the appropriate investments. And then the last I'd like to say, I had a team call this morning with my entire team, and I was thinking about, we have an adage, which is, the best is yet to come, which is kind of hard to look at right now with everybody, sort of working at home and going through their own struggles. But I shared a story of my youngest child who graduated from high school a couple of years ago, my only girl, and, in tears that she was leaving her best friends behind, that she'll never make friends again. Everything was going to be downhill from here because she was leaving this warm cocoon of a small all-girls high school here in New Jersey. And of course, 2 years later, she's been having the time of her life. Of course, she's had to finish up sophomore year at home, and her job for the summer has been canceled for the time being. But she's made the best friends of her life, and that transition went flawlessly. And I tell my team that, and is that the best is yet to come. And with some grit, which is another great book, talked about Who Moved My Cheese. Angela Duckworth's book, Grit, is another great one to get us through this. The best is yet to come, and we will get through this and emerge stronger. So thanks, Bob.
Ginger, let me ask you, this is something that I started hearing about last year. It may just be for big firms that have retirement payments coming to partners. Are you hearing about firms that are directing their partners to financial planners, either like maybe even in a resort situation, or like I've heard it called retirement school, how to retire, the financial aspects, the non-financial aspects, basically how to relax, all those kinds of things. Are you hearing much about that?
It is probably more for the bigger firms. I mean, I would say that our probably average size firm has, I would say, less than 100 employees total. So generally they don't have those types of resources available. But we are definitely seeing it with some of our larger plans, because that segue, to retirement can be difficult emotionally, financially. How do we get there? One of our board members works for a firm in the West Coast who has a person whose job it is just to help partners through the maze of Medicare. How to get through Medicare and how to apply appropriately to make sure that you're covered. So there's a lot of things to keep in mind, but absolutely this focus on the retiree needs, and both going into or working past normal retirement age, I think is going to be a big wave of the future.
Very good. Thanks for that. Now let's move to our last presenter, David Sherrill. David, will you introduce yourself and take it from there?
Sure, Bob. Thank you so much. Thank you, everyone, for your time today. As Bob said, my name is David Sherrill, and I've been with PwC for 20 years. I've spent the first 17 of those in our Philadelphia office, and I spent the last 3, in our New York market. During that time, I've been serving high net worth individuals in all areas of income tax and financial planning, with a primary focus on serving hedge fund managers, private equity owners, and law firm partners. PwC is a large law firm services practice which provides tax, assurance, and consulting services to many law firms around the globe, and I work directly with them in serving many of the individual partners. As my fellow panelists have described today, both individuals and businesses face a rapidly changing economic environment as a result of COVID-19. I'm sure many of us on this call have seen steep declines in the value of your investments, have concerns about income, even job status going forward. When the government passed legislation to assist small businesses and individuals, it created a number of favorable tax planning opportunities for individuals like yourselves. So I'd like to touch on a few of those now, starting with retirement planning. The CARES Act, which I know was mentioned earlier, has been the topic of the day and has waived required minimum distributions for certain defined contribution plans and IRAs for the 2020 calendar year. This waiver also applies to first-year RMDs that would be required due to an individual reaching age 70 and a half in 2019 or age 72 in 2020, which fell under the new Secure Act. This change allows taxpayers to avoid receiving a distribution, which may be a larger portion of the plan than they anticipated due to both the RMD being based on the prior year 12/31 ending value, which of course would have been higher, and the current depressed values of the assets today. Furthermore, it prevents the needs for taxpayers to sell assets held within their plans at these current depressed values in order to liquidate or generate cash to make the RMD. So to the extent a taxpayer is able to waive their RMD for the 2020 calendar year because they may not need the cash flow, we highly recommend them doing so. Another option is with regards to IRAs and the Roth IRA conversion. When a traditional IRA is converted to a Roth IRA, an immediate income tax becomes payable on the value of those converted IRA assets to the extent there is no after-tax or cost basis in those assets. The benefit is that the IRA owner will not have to pay income tax on any of the growth or on the money withdrawn from the Roth IRA later during retirement. Given the steep decline in the current market, converting to a Roth IRA now as opposed to having done so before the decline may result in a less tax being due on the conversion, because the taxes would be based on the current fair market value of the assets held in the IRA today. There are other factors, of course, that should be taken into consideration when deciding whether to convert a traditional IRA to a Roth IRA, such as current and expected future tax brackets, requirement of distribution requirements, etc. A third item that we've been talking a lot with our clients about has to do with charitable planning. This stems back to the Tax and Jobs Act of 2017, where, as many of you know, state and local taxes, real estate taxes, employee business expenses, et cetera. They were all repealed and are no longer available as tax deductions for us. The CARES Act replaces the 60% of adjusted gross income, AGI, charitable limitation with a 100% AGI limit for 2020. This means that donors can get a charitable contribution deduction for the full amount of their AGI, basically zeroing out your income and paying no tax for the year. Contributions in excess of this amount can be carried forward for 5 years, of course, subject to the old rules, which was the 60% of AGI limit. This higher 100% AGI limit applies to cash contributions made directly to charitable organizations. One note that's of importance that we have a lot of questions on, unfortunately, it does not apply to contributions made to private foundations or supporting organizations like donor advised funds. As we just discussed a few seconds ago with regards to the Roth IRA conversion, donors can increase their AGI by converting an IRA or other qualified retirement plans to a Roth IRA, thereby increasing their taxable income. This further expands the amount of income available for the 100% AGI limitation on the charitable side. Basically, it offers an opportunity for charitable donors who have an IRA to accomplish two goals at the same time: get a much larger charitable contribution in a tax year in 2020, but also pay no federal income tax on the actual Roth IRA conversion. Another item that I think is important that we've had a lot of lengthy conversations has to do with some wealth transfer planning, specifically a few comments on intrafamily loans and mortgages, given the reduction in interest rates today. Intrafamily loans can be utilized to enhance like wealth transfer plans, whether it be a loan from a parent to a child or a loan from a trust to its beneficiary. Loaning cash as opposed to making an outright gift can result in significant transfer tax savings. With the current low interest rate environment, the loan can be made for little cost. To the extent that the borrower actually invests those loan proceeds received, that borrower would then retain the appreciation of the growth in excess of the interest rate on the loan and avoid transfer taxes on the retained amount. However, the loan should be documented with the appropriate terms, interest rate, duration, and there should be an expectation of repayment to avoid the risk of it being recharacterized as a gift at a later time. All too often in our practice, we see intrafamily loans without proper documentation. So to the extent that intrafamily loans are already in place, borrowers and lenders may wish to consider refinancing these loans at what would likely be lower interest rates. In doing so, it should really be assessed whether the loans would make sense to extend the term of the loan or even increase the value of the loan. Further, with low interest rates currently in place in the environment, individuals may want to consider, and some of you may already have, consider refinancing your home mortgages to attain a lower rate. In deciding whether to do so, we recommend that all tax implications be taken into consideration as well. The 2017 Tax and Jobs Act provided that taxpayers could deduct mortgage interest only up to $750,000 of principal or indebtedness as an itemized deduction. But prior to that, a taxpayer could deduct mortgage interest paid on up to $1 million of indebtedness. So to the extent the origination date of the mortgage is on or before December 15th of 2017, that taxpayer can still utilize the pre-2017 Tax Reform Act principal balance. If the taxpayer decides to refinance their mortgage today, there may be some structuring available that would allow them to continue to treat their refinance mortgage, or at least a part of it, under the old law and retain the $1 million indebtedness on the principal balance. I'll close with two final comments. In estate and gift planning, it's very rare that we see a situation that many CPAs and trust attorneys call the trifecta. It exists where asset values are depressed, rates are at historic lows, and lifetime exemptions are exceptionally high. Right now, they're $11.5 million plus per person. As a result, we're having daily conversations with our clients. Many of them are law firm partners who have talked about setting up trusts for their kids, maybe considered grants, charitable trusts. It's a lengthy conversation, so I'm happy to go further into the weeds on some of those if anyone would like, but I know we only have a short period of time left together today. One last note on the market. Many of PwC's engagements with law firm partners are strictly consulting based, with a heavy focus on financial and investment planning. So I've had this conversation weekly, if not more. The question comes down to, should I be investing now or should I wait? No one has a crystal ball. What I can tell you is that we've seen a small rebound. While we've seen a small rebound in the market over the past few weeks, we've been debating what this truly means. Is this a result of government stimulus, consumer confidence? The majority of clients I've spoken to are very hesitant about the rebound and feel the market is still somewhat overvalued. I share that concern. Their focus has been on the economic drag we've begun to see and expect to see far more over Q2 and Q3. It's really simply amazing if you think about it. Just over 2 months ago, we were still railing about how strong the economic indicators were. Good job growth, wage increases, steady inflation. and low unemployment. But really, in just a short period of time, we've seen most of that flipped upside down. So my advice, stay the course, slow and steady will win this race. And with that, I'll throw it back to you, Bob.
Thank you, David. We have a couple of questions from the audience that I want to throw back to our panel. Courtney, we've had an audience member ask if you wouldn't mind sharing a little bit about your thought leadership writings. Maybe generally speaking, what topics have you addressed, and what do you think, what approach would you recommend for others in your situation?
Sure. In terms of thought leadership, it's like a general term that we use in order to talk about writing articles or maybe doing webinars or things like that. And so in terms of what I've written, I've done some internal blog posts about the CARES Act and how those relate to our clients in terms of planning for their employees and how they will address retaining employees as well as reducing salaries if they're going to take PPP loans and things like that. So I would choose something that's relevant to you, possibly relevant to your practice, and also timely in terms of what's going on in the market. It doesn't only have to be COVID-19 related. There are other things that are going on in the legal field. There are changes in employment and labor laws generally that might not be COVID-19 related, but might be relevant, and clients will have to prepare for those going forward. New York, for example, released a new law regarding paid sick leave that goes into effect in September, but clients will need to plan for that probably starting now or in the next few months, and that would be a timely article to write something about.
Very good. Well, you're reminding me, Courtney, that there's a lot out there about how to market in this environment, and I think the general consensus is you've got to be very careful here and just make sure that your clients and your network knows that you're there as needed. There's a lot of fun that's been poked at some firms that have gone overboard. I know right when things were really exploding a few weeks back, there were some T&E firms that came out very aggressively saying, hey, maybe this is a good time to get your estate plan in order. Probably not the greatest marketing plan. I think there are other ways to present the same message a little softer. But I think what you're talking about is very helpful. And for my own purposes, I work with law firms, large and small, and I had some very nice engagements going in January and February. But since then, as these firms have been focused inwardly, I've just been staying in touch, sending them articles, sending them some thoughts, checking in. It's all pro bono at this point, and hopefully that'll turn around. But I think a lot of lawyers are in the same boat where you're just trying to maintain and wait for clients to come back more focused.
And I should add that sorry, Bob, I wanted to add that the articles that we write generally are neutral. We don't try to advocate for a particular position because we're posting these to the general public, and we don't want someone to come back later and say we gave incorrect legal advice.
Right.
And we also check with our marketing team before we release any article. So never as an individual posting something on their individual Facebook page or something like that. You would check with marketing, and they would make sure that you've run through the appropriate channels before something is published.
Great. David Scharf, there was one question for you. One listener thought he may have heard you mention a book about the Cantor Fitzgerald situation. Did he hear correctly on that? Is there a book that captures that wisdom that you observed?
He did. The Rise and Fall of Cantor Fitzgerald. I believe Howard is the author with somebody that he co-wrote it with.
Got it. Well, very good. Looking for more questions from the audience. We have one just expressing appreciation to everyone, which I would certainly echo. Speakers, let me just throw this out to all of you. Does anyone have any supplemental comments, either things you meant to say earlier or that you're inspired to say now based on what you've heard from the rest of the panel? David Scharf?
Thank you. So, Bob, first of all, I loved what you talked about, going out there and staying in touch and providing advice and your consulting services. And the truth is, you pejoratively called it pro bono, but it's really not. It's great client development. Clients will remember your reach out, your care, and not getting a bill for it. And these are relationship building moments, the same way law firm leadership has opportunity to build relationships with people that they may not have been in touch with on a regular basis. I mean, I know one of the things that I took on about a week and a half into this crisis, early on in the crisis, I started writing emails to the firm on Friday about an upcoming weekend, good morning, Monday morning. It turned into a daily email that I send to every single person in the firm soliciting feedback. And we've dubbed it the Fast Five at noon. And we have said, everyone, take 5 minutes at noon together as a community, by yourself, wherever you are. And I talk about things that are going on in my life. And I've bared my soul and a lot of myself to people so that they get to know that the struggles that they may be feeling, they're out there. I talk about the things that motivate me, including the fact that emails and jabber chats that I get back from our employees and our associates and our partners motivate me and help me bring my game every single day. And it falls into the concept of, Bob, I think you were saying it right. You know, there is no the same anymore. There's no hiding anymore. And when law firms and any organization need to make tough decisions, it's the people that stood out, whether they stood out for stepping up or they stood out for stepping back, will help organizations make decisions. Who are we about? What are we about? And it's an opportunity to differentiate yourself and become indispensable to an organization to do things like Courtney is talking about doing, thought leadership. I mean, as law firm leaders, we love when our young partners, our associates, are looking to step up, take these moments and opportunity, and perhaps the hour a day that they no longer have the billable time, but are thinking about their business, are thinking about our business and how we make it better.
Great additional comment. Anyone else on the panel?
Hey, Bob, Dave Schrill here real fast. I just wanted to comment on one point you mentioned earlier, too, specific to your own benefit of hindsight, looking at your retirement accounts now, thinking about what you may have been able to do differently at a point in time. I know that's incredibly challenging for a lot of clients to look at and say, hey, things are tough. I need to cut back somewhere. Where am I going to cut back? Personal note, I can tell everyone, I have 6-year-old twin boys, and I sit here and struggle what it will be like to pay college tuition 12 years from now for 2 at once, and what that might be like. So 529 plans for me are a big item, trying to get that money in, get it invested, and letting that compound happen. Even though it's small dollars today, it really does add up long term. So I just encourage everyone to talk to their financial advisors or the CPAs to have those conversations about what will be the effect if I cut back on my 401k or my IRA today. Can we kind of model out this? It's an easy analysis for a lot of us to do, and we do it daily. So it can help with decision making, both valuing present dollars and future dollars, and maybe aid in how best to alleviate a tough situation now and still benefit later in life in retirement.
To make Dave's point and bring it home, stress test your business at home, and that's what it's about, and make sure you have good advisors. We as lawyers like to think of ourselves as good advisors to our clients, but somehow we often forget that we are in need of the very same advice that we give to others. And especially when it comes to financial planning, we shouldn't be making these decisions. My family reached out and we encouraged all of our partners and associates, talk to your accountants, talk to your financial advisors, and we made sure that our individual client services practitioners in our firm who practice trust and estates were going to be there first and foremost for our employees. We reminded everybody that they have a little bit of a slush account of free legal services that we provide them. Take advantage of it if you haven't taken advantage of it now.
Bob, it's Ginger. The other thing I would just add too is the same thing applies for the retirement plans. Is there's hope, there's services out there where you can actually help do a comparison to make sure that it's the right one for your firm. So I would encourage every firm to take advantage of that.
Well, folks, listen, I think everybody has done exactly what we wanted them to do. I really want to thank our panel and our organizer, Dawn from Thomson Reuters. I want to thank everyone who joined in today. I've had my eye on the Q&A here, and if one pops up in the next 15 seconds, we'll put it to the panel. But it looks like we may have run our course here. So again, thank you all for coming today, and we'll look forward to seeing you on another occasion. Thanks, everyone.
Stay safe. Everyone stay safe.
Bye. Stay safe.
Thank you.
Thank you.